Today, Oscar preliminarily released their earnings report, and this can oftentimes be a very bad thing for a company. However, for Oscar, the stock actually moved up by over 8% after this announcement. And interestingly enough, I posted this tweet on X last night that EPS for Oscar really shouldn't matter now for investors because the primary metrics that are important for the company are member and revenue growth. And this tweet really summarizes what exactly happened with Oscar's stock today, because they decided to pre-release some of their earnings based off a report provided by Wakeley. Wakeley is an independent actuary firm. They look at the broader healthcare industry, look at a number of different risk factors around the industry, and give kind of an analysis of where it could be headed over the coming months. And this allowed Oscar the opportunity to come out and provide some bad news really to investors a little bit ahead of their earnings announcement. That bad news was that in the second quarter, they're expecting operating losses of $230 million and net losses of approximately $228 million. And these losses are being driven by higher utilization. Basically, people who are going to the doctor and utilizing their insurance are racking up larger bills than Oscar had originally anticipated. And the metric that this drives up is the medical loss ratio. For 2025, Oscar is projecting that their medical loss ratio will now be between 86 and 87%. What this percentage actually means is how much of Oscar's premiums they're anticipating they're going to have to pay out in terms of medical coverage. To put these numbers in perspective, Oscar's medical loss ratio in the first quarter of 2025 came in at 75.4%. That was up 1.2% from 2024 when they posted 74.2%. And this 1.2% jump takes a massive hit out of Oscar's bottom line numbers. So now we are talking about over a 10% jump from this last quarter number. So these are big numbers that we are talking about. This 85% medical loss ratio that they could suffer throughout the rest of this year could have a huge effect on Oscar's bottom line. And that is exactly what we are seeing from Oscar. They have updated their full year guidance for 2025, and they are now anticipating a loss from operations between $200 and $300 million. And that is actually a huge flip of almost $500 million, because at the start of the year, they provided guidance for 2025 that projected them actually earning around $225 to $275 million from operations. So with all of this bad news, why is it that Oscar's stock moved up by 8% today? It's because Oscar is a growth company. They are in their growth phase right now, and earnings are not super important for a company that should primarily be focused on growth. And Oscar right now came through with an increase in their anticipated revenue. They are now anticipating that revenue for 2025 will come in between $12 and $12.2 billion. At the start of the year, the company was anticipating that total revenue would come in between $11.2 and $11.3 billion. So this is a raise on their overall guidance. And then on top of that, a year ago, the company put up $9.2 billion of revenue. So now they're anticipating that in 2025, they will see their top line grow by around 30%. These are huge numbers. 30% growth for Oscar is going to be a great move in the right direction. The other factor with all of this is come 2026, all of these healthcare companies are going to be increasing their premiums. So hopefully in 2026, EPS will take more of a front seat for Oscar, and we will see them get back to growing their bottom line. So based off this pre-release of numbers, we can assume kind of two things about Oscar's second quarter earnings announcement. One, their EPS numbers are going to be terrible. They're going to come through and completely miss on the bottom line. However, this is kind of to be expected with how the healthcare industry is right now. The second thing, though, is that revenue numbers are likely going to come in and beat analyst expectations. That should be a very positive thing. The last metric that is extremely important for Oscar that we don't really have any insight to, but we could kind of make an assumption around, is going to be their member count. Member count in the first quarter grew by 40% year over year. If we are seeing revenue estimates come in higher, it's very likely that Oscar is continuing this strong member growth. So this quarter, we definitely won't see positive earnings, but maybe we will see something similar to what analysts were expecting for the third quarter of losses of around 20 cents per share. I think it will probably be higher than that, but we will just have to wait and see. However, for the top line, I think that honestly, Oscar is going to come through with a number of over $3 billion, probably closer to what analysts had as their high estimate for this quarter. And honestly, something to keep in mind as we go throughout the rest of the year is if Oscar continues to grow their member count, and let's say they grow it by even more than they are expecting, that is actually going to make their losses likely worse in 2025. Because as they bring on more members, if they are utilizing the same amount of healthcare as the rest of the industry or the industry standard, that means that their medical loss ratio, again, will fall around that 85-86%, which will result in more losses for the company because they naturally have more people using their products, using their insurance. So again, we could actually see EPS numbers get worse over the next couple of quarters, and they could present even higher loss numbers than what they are anticipating now. However, when they roll into 2026 and they increase their premiums on their users, we should see this kind of start to flip. Those new users are going to result in higher profitability for the company. So for the next 6 to 8 months, profitability is not going to matter for this company. Any paying attention to Oscar's EPS numbers is really not going to be warranted or make much sense. We can see that reflected in their forward PE ratio. Right now, it's sitting just under a 600. And honestly, we are not going to see this turn around until probably the end of 2026. We might start getting a better idea halfway through 2026, but I think it's not very likely that we get a good idea of where Oscar is going to be until probably the third or fourth quarter of next year. But what that can lead to is if we see things turn around, we see their premiums flip in 2026 and they start becoming a lot more profitable, at least early in those first 2 quarters, likely the stock should run up ahead of further anticipation into 2027 and 2028. But do keep in mind that I own shares of Oscar and I'm very bullish on this company. I've been adding to my position, especially as the company has dipped. This is the YouTube portfolio, and right now it is sitting at a total value of just over $72,000. And right now we have 2 healthcare related positions in this portfolio. One is obviously Oscar. We have 175 shares of the company worth around $2,500. We're up just under 5% on this position. The other company that we own is UNH, United Healthcare Group. We have 16 shares for a cost of around $4,500. However, on this position, we are down almost 5%. And honestly, my reasoning behind this is I think overall, the healthcare industry right now is beaten down so bad that over the next couple of years, it should rebound very nicely. Again, all of these companies are going to look to increase their premiums, and that should flip a lot of them back to profitability. UNH alone has talked about getting back to growth on their top and bottom lines in 2026. So I think that honestly, Oscar will follow suit and we will see this industry as a whole outperform the market over the next few years. But other than those 2, I hold Google, Supermicrocomputer, AMD, Microsoft, SoFi, Adobe, PayPal, Abercrombie & Fitch, Alibaba, United States Lime and Mineral, Estee Lauder, Zeta, and Hawkins. But I'd love to hear your thoughts in the comment section down below. Do you hold Oscar in your portfolio? And what are your price targets for 2025 and for 2026? Do you think the stock is going to be trading up or down by the end of 2025? And then where do you think the stock is going to be trading at by the end of 2026? I wouldn't be surprised if Oscar is trading between $20 and $25 per share early 2026. And then by the end of the year, if it's trading around $30 to maybe $35 per share. But that's just my opinion. Don't buy stock just because some random guy on YouTube talked about it. Make sure you are doing your own research, looking into companies that meet your risk tolerance as well as your time horizon. Thank you guys so much for watching. If you did enjoy the video, drop a like down below and subscribe for more videos like this one. And as always, have a wonderful rest of your day.